All right, good morning, everybody. Happy Monday. Can you guys hear me okay?
Yeah, we
Yeah,
got you.
Hello, hello.
yeah, we're good.
Got it. Thank you. All right, let's start with some gratitude. We're at that time of the year. A lot of things to be grateful for in our lives, but who wants to maybe kick us off with something you're grateful for?
I will.
Anyone? If you guys are saying anything, I apologize. I cannot hear you.
Hey, Chip,
Somebody said, yeah,
Go.
somebody said I will. Was that KK? Was that you? Go for it.
It was me.
Go for it. We can hear you. Let's roll.
So I have a lot of listings and I try to do open houses every weekend. And a lot of the new agents, especially the ones in productivity, have jumped in and really helped me. And I think it's great that they're jumping in to do that.
Nice. Chip, did you hear that? I think he might be, everybody else can hear us, right?
Yeah.
Yeah, I think he
Yeah,
might be having,
I'm gonna text Chip and tell him he's not
Hang on
hearing
one
us.
second.
okay. Anybody else got anything good gratitude wise going on personally, professionally?
Can can anybody hear me?
I can hear you now, Dave.
Yes.
I can hear you.
Good morning.
Well, we might have lost him altogether. He might have went out and came back.
We can't hear anybody.
Can you guys hear me okay now?
Loud and clear.
Yes.
All right, I got you. Awesome. As always, one little setting that I missed. Thank you, Liz. All right, gang. So let's start with some gratitude today. Who wants to kick us off?
KK already gave us a great one that she's got a lot of open houses. She's got a lot of participation. I don't know if she wants to repeat it, but she started it off with a good one. I don't know if anybody else has anything else they want to add.
Well, I appreciate it. Thank you for sharing that, KK. Sorry I couldn't hear you. But hey, congrats. I love that level of activity.
That'd be the first time somebody said they couldn't hear me.
That's awesome. All right, who else? Let's give maybe a couple more. What are you grateful for?
Hey, Chip, Joe Lindsay, we appreciate you doing this every Monday. It's amazing.
No, hey, I'll you know me, I'm gonna nerd out on some numbers and people want to listen. I'm happy to have that. But I appreciate it, Joe. Thank you.
I want to say that I'm grateful for all the people in our office and how we're able to collaborate with one another and help each other and grow together. It's definitely a special office. We have great leadership and just great people around us, and I am very grateful for it.
Yeah, thank you for that. It's I will say that it's one of the things that does make this particular market center pretty unique and special. You can find versions of what you're talking about at other places and other KW offices, but not to the scale that this one has. So it is something very special, and I'm glad you guys are all a part of it. So thank you for sharing that.
Chip, I gotta second that. This is coming up on a year back at Keller Williams after being gone for 4 years, and great. It was a great move. Great group of people welcomed me back. People that I knew, people that I didn't know, but you don't know what you've missed until you leave it. And I'm just happy. It was a fast year that went by. I'm just happy to be back.
Yeah, I'll this is a quick kind of support of that, and thank you, Dave, for sharing that. I got a lead for a recruit. It was a KW agent out of Iowa, buddy of his, working for a firm here in the Charlotte area, and he's like, I really think that you and or Keller Williams is the place he needs to be, and that can help him and all that. So I made an appointment with the guy, and I met with him last Monday. He shared with me on Monday when we were done, he goes, I'll be honest, I was just doing this as a favor because I had no intention of coming to Keller Williams. He's joining us tomorrow because of everything that he saw and what we can do and what we offer, and just even the seeing of the things that you guys have already described was a game changer for him, because that's not what he was expecting when he walked in the door. So yeah, it's just, again, it's one of those testaments to who we are as a company, and I love it. So, all right, gang. So here's what we want to do today. I want to look well, before we even jump into some of the numbers, just as a little housekeeping item. Of course, next week is Thanksgiving week. Is it next week already? Gosh, it is, isn't it? So yeah, no calls next week, no group calls. We won't have this one next Monday. We're going to take some time off, recharge the batteries, kind of get ready for December, because we're going to finish strong in the month of December and get ready for, hitting the ground running in January. So anyways, holidays are upon us. So with that said, here's what I want to do. I want to go into share screen because we're going to look at some national numbers today, but we're going to kind of talk about a couple of different things. I want to talk about this Case-Shiller National Index. We've talked about it before. We've referenced it before. We've looked at it before. So here's the thing. Some of this, like, I just got this email, but of course, not all data is updated with the government shutdown and everything. So we'll start to see, some catch up going into December with some more accurate data. But I love this first graph here because this one takes us all the way back. I mean, we're going back to 1989 here, and you can see, just look at the national index. Don't worry about the composites right now, just this kind of gold color, yellow gold color line, which they all pretty much run in tandem anyways. But here's what I want you to look at, because to me, this is a great perspective of what's happened to real estate home prices and values going back again to 1989. So of course, if I look at this giant dip here, we can see what period of time it is. Here's the Great Recession that came upon us in 2008, and then what that did to the home prices across the country, well, in some instances even globally, where we didn't start recovering until, we were down in here of seeing any kind of appreciation back on the market. And even here, if I look at just the national index, we still weren't back to like a balanced level, and we still kind of bounced around the bottom here a little bit, right? This is where the government was starting to really kind of get aggressive with lowering interest rates, trying to get the economy flowing again, get people back to work so there were jobs. And if there's jobs and people have a stable job and good income, then they're going to have a desire to go out and buy homes. But, the prices were good, but they had to get rates kind of, as a hook, if you will, to kind of get some buyers back on the market, who would have been pretty spooked if we come back here to going into the beginning of 2008. We finally started to cross the line here. You can see 5 years of what that kind of a market was like. And there's quite a few of us, as I see some of the faces on the call this morning, there's quite a few of us. We were working our career during this period of time. You want to talk about a buyer's market? This is a buyer's market. This is an extreme buyer's market way down here at this bottom. Very, very much a buyer's market. But then we started to get into this kind of period where we started to see appreciation with home pricing. You can see here where it began, and again, where we kind of started to cross the line here, probably 13, 14. And then look at where we've been. Look at where we've been. Look at where we've been. Of course, this here, this section right in here, this is that late 20 going into 21 period of time, you know, during COVID. Very, very cheap interest rates. Anybody could work from wherever. People were highly mobile. Everybody wanted to buy a house, second homes, vacation homes, everything started to pop in here. And then, of course, this decline right here, this is when we saw the rapid rise in interest rates in 22. You see what that did to, of course, demand. So therefore, demand dropped. Prices started to kind of weaken a little bit. And now we're bouncing. But see what's starting to happen over here. We got this trend line coming down because we're coming into, you know, if we look at last year, 2024 nationally, in terms of the amount of resale homes we sold, it was like a low that went back to 1980. I think it was 1989. The lowest amount of resale homes we'd sold in the United States last year in 30 some years, 35 years. So eventually, because we have been in this sort of industry recession for about now the last 3 years, what might start happening to prices? Well, we're kind of seeing it on a trend here start to go down. Okay. Are we going to do this from 2008? Most likely not. Will we maybe see this little bottom here that we saw from when interest rates were going up in 22, going into 23? This potentially could be what we see in terms of a bottom. And yet at the same time, we could see this thing turn right here and start going back up again into the positive range, or at least to remain in the positive range. Bottom line, if we go back here to, like I said, 2012, 2013, other than this little dip right here, this is what the last few years has looked like in a seller's market. So when I talk to a lot of you guys, and I say, you know what, if you've been in the business 8, 9, 10 years or less, you've only worked a seller's market. The thing about it, you've had some pretty amazing extremes of that market. You've seen everything you could possibly be thrown at you in a seller's market. And this is why it feels a little funny right now, like maybe, are we getting into a balanced market? Are we getting into a shifting market? What happens? You know, why is it taking longer to sell homes? Price reductions, no showings, low showings. This is what it feels like right here. Right here is what you're starting to feel. So this is again, I just wanted you guys to have a visual perspective of how the market has performed. And of course, I really started the chat about it right in here from the Great Recession period of time. By the way, great tool to keep on hand. Use this with buyers, use it with sellers, use it with whoever. Post it. I mean, you have the ability to go in and capture this information through Case-Shiller. Just go directly to them and see what you can capture within their world in terms of shareable documents. I'm sure as long as the credit's there, you can post it on social media. All right, so let's kind of keep rolling here. I'm not going to go through, I don't want to necessarily go through that, but I do want to click over to this one real quick. So this one's going to go back to January of 2000, of course, through today's period of time. We can see over here, this is our month over month price change. So this is looking at from more of a monthly perspective. The other one was more yearly. And we can start seeing in here kind of where we are. We've had our little dips even in 25 on a monthly basis nationally. Of course, here was interest rate rise, Great Recession in here. And you can see how things, even seasonally adjusted, or what seasonality tends to do in the market, the December, January periods of time. Great way to look at this from a different perspective. Still over a wide sampling of time, but more on a monthly basis, just to kind of get a feel for what things are like. Okay, so I wanted you to see that one. 12-month house price changes. This is prior year versus most recent year. This is breaking it down, of course, into the US. So this is going to be, this one was August of 24 through August of 25. August of 24, we had a 4.6. August this year, 2.3. Nothing new on that. Here's what it's starting to do on this one, though, is it's breaking things down by geographical areas in the US. So if we looked at Middle Atlantic, 6.3, 6.1. We looked at South Atlantic, 1.3, 3.9. Again, if you've got folks that are moving in from other areas of the country, maybe what does their market look like? West and South Central, West and North Central, even that huge difference there, right? Pacific, look at that, down 0.6% price change in August of this year versus a 3.2% increase last year. All right. This was interesting here. New York again reported the highest annual gain among the 20 cities with a 6.1% increase in August, followed by Chicago and Cleveland. Tampa had the lowest rate of return at 3.3%. It's going to be interesting to see kind of what happens in New York. It's going to be interesting to kind of follow a little bit of what's going on in some of these bigger northern cities. Because a lot of times they're the ones that tend to kind of lead us, maybe not nationally, but regionally into a lag. It's not unusual to see places like Tampa, Phoenix, Orlando tend to have some pretty significant drops. Some of the Southern California cities. So we'll just have to watch some of this again, because you could have people, all indications are we're going to continue to see a pretty steady amount of folks, consistent amount that will continue to move to the Charlotte metro area in a foreseeable future. We're just going to have to watch where they're coming from. Are they selling a house? What's it going to look like in terms of trying to buy a house here? You know, what does it all look like? And this is our opportunity to kind of keep an eye on it. Here's that, again, just a kind of a different look of the national index. This one goes back to 87. Here's the one we looked at earlier. And that's what I wanted to show you on that. That took care of that one. So here's the thing I want to do, guys. What's the difference between inflation and appreciation? A little bit of an economic test here. What's the difference between appreciation and inflation?
Inflation, I think, is you're getting less for your money. Prices going up. Appreciation is if you're a homeowner, you're earning more equity in your home.
Yeah, absolutely, 100%. Thank you, Dave. Anybody else? Zach Howes, rise of cost versus rise of value. Yep.
That's my positive vision of it.
Yeah, no, love it. Why do we need to know, not necessarily the difference between the two? Sharon Finch, appreciation is natural causes for increase of value. Inflation is caused by the government. Yep, could be, sure. Yep. Here's another way to look at it, guys. Inflation affects all prices. Appreciation, we're talking about the house. Now, here's the thing about real estate appreciation. Some of it can be market driven, simply by demand. You know, if you think about it, housing is very much into the macroeconomic concept of supply and demand, right? Condition also matters pretty significantly. Location matters pretty significantly. The economic environment where the house is located, think about the city or location. How healthy is that local economy? What does their infrastructure look like in terms of transportation, roads, medical? All of that stuff matters significantly. So here's the thing, and why I bring it up, because you probably have heard this in the past. Real estate can be a hedge against inflation. Real estate can be a hedge against inflation. What does that mean? Has anybody ever heard that before?
Maybe you can sort of protect your wealth a little bit by investing in real property.
Correct.
And
Yeah.
your payment on a 30-year fix, your payment's not moving. Well, everything else.
Correct. Correct. 100% correct both. This is about leverage, guys. So here's how I want us to start thinking about real estate, because yeah, most of the time we're helping people with a financial yet emotional decision to buy a house that they're going to live in. That's taking care of their housing and their personal and family needs, right? Yet we have to, I think, have a deeper understanding of the economics of what this looks like. So Teresa brought up something. Here's the thing, guys. You can go out and get I'm just going to throw a rate out. You go out and you can control an asset by putting 20% down, locking in a rate, 6% for 30 years that doesn't change. Here's the beauty of it. What happens to any appreciation in that house? Who does it belong to and how much of it belongs to them?
100% yours as long as you make those payments.
Yeah, as long as you keep making the payments. All of that appreciation is you get 100%. You only had to put 20, and I'm just using 20% as the example here, guys. You only put 20% down to buy the asset and control it and get ownership of it. That appreciation, all 100% of it is yours for that same 20%. If inflation rises, what's going to happen to interest rates? They're going to go up. This is what Sharon was talking about. The government's going to get involved now, right? So they're going to rise interest rates so we don't go out and borrow money and buy things as fast as we were. So the beauty of it is a rate can go up to 8, 9, 10. We've seen them 16, 17, 18% back in the 80s. If I got my 6% locked in, or my 5, or my 6.5, or whatever I've got locked in, that's my rate. As long as I keep making the payment, I control it, I control the property, I have 100% of the appreciation. My payment is locked in for that entire time. The only thing that might change payment would, of course, be, changes in escrow, escrow payments to insurance and taxes, right? Guys, huge leverage when it comes to looking at real estate, not just simply owning it for your own, but looking at it as a financial investment and a hedge against inflation. The thing about it, one of the reports we did last week showed that in our market, we were up like 2.6% year to date in the Charlotte area, Charlotte region, in appreciation on single family homes, 2.6%. What is the current, or what's the most recent reported inflation rate from the government?
I think it's still 2.4, 2.3.
Yeah, so here's the thing, guys, at 2.6, we're outpacing inflation.
We don't really know what it is because they're not doing any reporting.
Yeah, we really don't know what it is, and that's what's at kind of the last reported one. But guys, even if we're at 2.6 and inflation's at 2.4, we're outpacing. The value of this asset that we own, this piece of real estate, or multiple pieces of real estate, if they're appreciating at the same rate, and I'm beating inflation, what's that doing to my wealth?
Increasing.
There you go.
And guess what? When the rates come down, you can refinance it. It's a win-win-win.
Control it even further, leverage it even more, or go leverage more properties. Think about this with real estate investing, right? But see, guys, these are the kind of conversations we can have with people. Remember, if you're on my other call I do on Tuesday, Wednesday, Thursday, last week we were looking at the profile of home buyers. Average first-time home buyer age now is like 40 or 41. There's a big opportunity to educate people on what this looks like of owning a house beyond the usual conversation we have.